What's going on, you guys? My name is Zach Hartley, and welcome back to episode 4 in my podcast series. In this video, we are going to be sitting down with Jack Rosenthal, who is a 19-year-old investor, entrepreneur, and author. I'm going to ask him all about his business, all about his portfolio, and all about how he invests his money and thinks about his investments. So if you get any value out of this video, remember to click that like and subscribe button. Let's jump right in. All right, Jack, thank you so much for joining us here today. How are you doing?
I'm doing great, Zach. How are you?
Good. I'm doing well. So I want to give our viewers and our listeners just a little bit of a background on you. Can you tell us where you're from? How old are you? How did you get started investing in the markets? And what's the story here?
Sure. So I don't know. Am I the youngest person you ever had on the podcast?
So far, yep.
Okay. All right. So if you can break that, that'll be impressive. So my name's Jack. I'm 19 years old. I'm a rising junior at Babson College, which is in Boston, Massachusetts. Pretty much just some background on me is I've done some cool things. I wrote a book on investing for teenagers. I don't know how long you want this intro to be. You want it to be a minute, 3 minutes? What do you think?
1 minute. Exactly? Give us the 1 minute elevator.
1 minute. Okay. All right. So I wrote a book on teen investing, which became a top-selling book on investing for teenagers, actually the number 2 best-selling book on investing for teenagers. And then after that, I wrote some other books, Teen Entrepreneurship, Teen Investing 101, and a Teen Crypto book, which is my latest book I just came out with. And yeah, that's pretty much the story on me in under a minute.
Sweet. What are you studying right now at Babson, you said, right?
I'm studying finance at Babson.
Cool. And you're a junior right now?
Yes.
Nice. So how did you decide you wanted to get into finance? How did you first get into stocks and investing in finance in the first place?
So pretty much my grandfather actually introduced me to the stock market. When I was 8 years old, he set up a stock market portfolio for me. He gave me $5,000, which I know is a lot of money for a grandfather to be given a grandchild, especially at a young age like that. But he basically said, you can't touch it. I'm just going to put it in the markets. But you can decide how you want to invest it. And that was really my first kind of experience investing in the markets. Alongside him, he kind of really taught me like the basics of the markets, and is really responsible for like me getting interested in it at an early age. So I've been investing ever since. And then in high school, I started something called the Young Investors Club, which is when I was 14 years old, basically got a whole bunch of kids to put in money into the market, and then we'd manage the money collectively. So by freshman year, we had, I don't know, around $20,000 in the group. Then junior year, we had about $40,000 in the group. And then by junior year, I took it to about $115,000 that this group was managing in the stock market. And yeah, that was another introduction into stock market investing as a teenager.
Very exciting. Okay. So you kind of build that up, and then university comes around. And how did you decide to go to Babson?
Great entrepreneurship program. So decided to go there because of that.
Gotcha. Okay. So you're a junior now, and I assume you're kind of managing your own portfolio while you're going to school. What does life look like right now for you?
Yeah. So pretty much, I mean, managing your stock portfolio, as I'm sure you would know, and many other investors would know, you don't need to put a lot of time into it if you don't want to. So it's definitely very doable to go to classes during the day and then just take a look at that once a night or less. And yeah, so pretty much just kind of looking at that in the evening. And that's when I check my stock market portfolio, my personal one.
And are you focused on just your own money, or are you still kind of investing with some group money from high school type thing, or is it just your own portfolio that you do?
So with the group, I basically passed that off to another high schooler to run it after, because I was going off to college. So I didn't want to be a college student running a club with a bunch of high schoolers. So I passed it off to a high school student, and it's actually been passed off 2 times now. So it's three people later. The club's still going. It's still strong, which is cool to see. But yeah, no, I'm no longer involved with that. I just basically some other people, gave me some money to invest for them in the stock market, and I invest some of their money in the stock market for them. So I do that in addition to what I do for myself.
Gotcha. Cool. So how big is your personal portfolio that you're kind of managing with that's under your own name?
Okay. Gotcha. All right. So we've just recently started doing this net worth reveal thing. I didn't feel very comfortable doing this stuff, especially, I don't know. But anyway, now I've kind of decided, like, I think I think it does more good than harm. I don't think anyone really likes having other people know how much money they have, but I also think that it helps with getting more people to watch this podcast, which is great. And I think that's kind of a worthwhile trade-off. So in my personal investment account, I have $250,000 that I invest for my own. I can't go into how much I invest for investors, but just for me personally, that much.
Cool. So that's awesome. Like, congratulations. I mean, 19 years old with a portfolio like that is extremely impressive, no matter who you are, where you are, or how you look at it. So congratulations.
And that'll be a great thumbnail for you, by the way.
Hey, there we go. Thank you. Okay. So let's talk about, how do you manage that portfolio? What do you invest into? How do you think about it? And how do you structure your portfolio?
Yeah. So I really like ETFs. They're a great investment, especially the lowest fee ETFs I can find. I think those are great. So I'd say about like half my portfolio is probably just like in the S&P 500, just kind of leave it sit there in a very low fee ETF and just kind of let it sit. I also invest in financial stocks. I like Blackstone. I think they're a good stock. I bought them a little while back. Berkshire Hathaway, that's probably my favorite stock there is, another financial stock. And yeah, those are some of my favorite investments. So pretty much half in the S&P and the other half, I just pick stocks.
Gotcha. And it sounds like S&P is definitely long-term. Blackstone and Berkshire, definitely kind of long-term stocks. Are these kind of dollar cost averaging? You're just consistently putting money into them, or are you trading in and out of any of these?
Usually I'm just kind of consistently putting money into them. Yeah. I don't trade probably as much as the average person who's really interested in investing trades. I like to do it maybe, I don't know, once every 3 weeks or so, not super frequently. So yeah, no, I'm not trading in and out every single night, but
Gotcha.
yeah, just constantly adding new positions.
So it feels like the S&P 500 is kind of self-explanatory, but can you talk to us a little bit about what you liked in Blackstone and Berkshire and why you decided to choose those two?
Yeah, sure. So Blackstone, I think they have a really great brand in the asset management world, which I think, like asset managers, it's a really interesting thing. I kind of made the point, I was like, how come there isn't just one asset manager, like the one with the best returns? You would think just all the money would just flow there, right? Because what do people care about in investing other than returns? They theoretically should care about nothing, but that's not the case. There's a lot of other asset managers, and no one has even the majority of the money or even a small portion of the money. So brand is really important in the asset manager space, and Blackstone is the strongest. So that's why I really like that investment. And then Berkshire Hathaway, just because, Warren Buffett's strategy, but also Warren Buffett uses his own strategy. Warren Buffett buys really boring businesses, and his company, Berkshire Hathaway, has stakes in, I would say, some of the best boring businesses there are in the world. So I really like their investment portfolio, and that's why I chose to invest in Berkshire. I also bought in at a good price. So that was also, I put in majority of the time that I bought in was at a good price. That was also why I did it.
Nice. Right on. Are you investing into any kind of smaller cap technology stocks or growth stocks or anything along those lines? Or do you kind of play it safer with sort of these bigger names and kind of conglomerate?
So I would say like very small percentage goes, I would say not really as much. I would say maybe 5% goes to like smaller, riskier kind of stocks. The vast majority goes to like these bigger, large cap stocks, indexes, etc.
Gotcha. It sounds like you've probably got something else going on that sort of funds everything. Are you running some businesses on the side, or what else do you have going on?
You can't. There's no way to grow from nothing to 250 without even putting the S&P 500. It would take you, I don't know, a whole lifetime to get there, starting from a small amount to 250. So yeah, you're right. So in addition to this, I run a marketing agency, and that basically is the cash flow that fuels my investment account. And I've been running that for, I don't know, 3 years now. So the cash flow from that, invest it, and that's pretty much how that works.
Sweet. What kind of marketing do you focus on, or is there a certain niche or type of marketing that you do? How does it work?
So just making sure. So the kind of marketing that I focus on is pretty much social media marketing, basically running Instagram, Facebook pages for companies. Simple, boring business, boring just like Berkshire. But like every single company nowadays pretty much needs a social media presence. And if you can get if you can get even a handful, it's a very profitable business. And I don't really do any of the posts. I'm more just kind of like the manager of the business. So I have people that I kind of outsource to that do all the posting. And yeah, that's the business that I run.
Gotcha. And then I assume the business pays you a salary, you live off the salary and invest kind of what's left over or a portion of that. Is that how you
Well,
set things up?
I don't
Or?
exactly live off the salary. I'm only 19. I still live in college. I don't
Ah,
really have as
there you
many
go.
expenses as the typical adult would, even though I'm sort of an adult. But yeah, that is how it works.
Right on. So when you've got some money and you're ready to put it into the market, then how do you decide? Do you put it in Berkshire? Do you put it in Blackstone? Do you put it in the S&P? How do you think through that process when you're like, okay, I got a couple of G's, time to deploy it into the market?
Yeah, so I'll really kind of sit around and like do a timing kind of thing. I care about timing much more than I care about the actual investment I'm making. I mean, both are important, but like if I have a couple thousand and it's not the right time to invest in the market, I'll just sit and hold that in cash until I think there's a good entry point. I'd far rather buy it like, a good entry point for one of these stocks than just have it invested in the stock.
Gotcha. And what kind of factors are you looking at to determine good entry points? Are you looking for small pullbacks? Are you looking for a full market correction? How do you know when it's a good time to actually redeploy that capital, I guess?
Yeah. Trying to think. So yeah, market corrections I definitely don't wait for because I think it's too like you can't sit around waiting your whole life for another market correction. It could take too long for that to come, too many years. But yeah, I would say like a small pullback is definitely so. Like, let's say I'm going to start investing. Let's say in a month, like let's say day one, I want to. Okay, I got a couple grand. I want to put it to work. I'd kind of wait like a month or two and find like the best day within that month to buy the stock and then buy it that day.
Gotcha. Okay, I see what you mean. And you're a junior right now in finance. What do you want to do when you graduate? You have 1 year left, I assume, going into the summer, and then 1 year, or is that where it's at?
So no, 2 years. I'm a rising junior. So 2 years left of college, well, 1.5 really. And yeah, probably going to investment banking after college. But it depends. We'll see. We'll see what I end up doing. I haven't
Gotcha.
decided yet.
Cool. Okay, so tell us about the books and what advice do you have for somebody that is, let's say, your age or 2 years younger than you, 3 years younger than you? How did they get started in the market? If, let's say, they only have $500 because they work at a pizza joint part-time, how do they get started in the markets? What advice would you give to them?
Yeah, sure. So I would say, I mean, investing in the markets has never been easier. It's super easy to get access to an investment account, even under the age of 18. You can have a parent set up an account for you, and then you pretty much can invest. You can invest directly by yourself. You can invest with apps like Fidelity, anything like that. So definitely very accessible. My biggest advice would be get the account set up, start trading a little bit just to learn. And then once you kind of get more comfortable with it, let's say, I don't know, you put $100 to work of that 500 just to kind of get an idea of how to trade. Then then because you have 500, which is so little, I wouldn't try and be too diversified, especially at that small level. Like you could pull out all your hair being like, oh, I want to put $50 in this stock and, $100 in this one. Like it's just too small. I would just find either an index like something like that because it's such a small amount of money. You want to be too diversified, but you just want to buy one security. So I'd probably just buy an index if you only have $500 that you really like. There's a whole bunch of indexes out there, so you could research whichever one you like and put the money to work there. And then once you start expanding your capital base, then I would start choosing specific stocks that you really like and really believe in, and you think are going to be around, for you think you're here to stay, and then invest in those companies as well.
Gotcha. And do you ever find yourself going through your portfolio and rebalancing it, or is it always just kind of adding where you think the best opportunity is based on timing?
So sometimes I'll sell, like if I really want to buy a lot more into a stock, but I don't have the cash for it, then I'll sell a position that I think is like, it doesn't have as much growth potential, pretty much sell that position plus whatever cash I have and then buy a new stock. So yeah, sometimes I do, but most of the time I'm not rebalancing. Most of the time I just like to add.
Gotcha. And do you have any opinions on the current market situation with high inflation, rising interest rates? How are you changing your strategy at all in this economic environment compared to where we're at a year or two ago?
I mean, it's really difficult, right? Because like inflation, it makes it even harder to hold cash, which is not great. So I would just say putting as much of your money to work in the markets as possible is the best thing that you want to do, because you're invested in the markets, you're invested in companies, and those companies, most companies, I would say, are direct beneficiaries of inflation, especially ones that sell tangible products. So as long as you're invested in those companies, you're basically you're benefiting from inflation. So I would just say put as much percentage of your money in the markets as possible, and you'll be fine in the long run.
Gotcha. And are you do you ever would there ever be a point where you sell out of your portfolio and convert into cash because you're worried about what's happening, or do you say tried and true all the way through, keep averaging down?
Yeah, no, I would never sell out of the whole portfolio. Yeah, so I just say keep adding, keep averaging.
Gotcha. Cool. And for any
Right.
of our listeners that are like interested in what you're doing, it sounds like you have some books on Amazon. Where can people go to find more information about yourself and what you have out there?
Yeah, sure. So type in teen investing into Amazon. My book will come like right up, or Jack Rosenthal, and then you can also check out my other books too. And yeah, those are really the two best ways I would say to get more information on me. The books are really informative, especially the teen investing one. That's kind of like in my main book. I've had a lot of success with teenagers saying they read the book and they liked it, and it explains it in a very simple way, or very simple but helpful way, that's applicable to teenagers and they can really learn from. So books are really awesome. And yeah, that's all I would say. But yeah, thanks so much for having me on the show. I really appreciate it. And thanks to all your listeners for listening.
Hey, no worries. Thank you for coming on. Thank you for sharing your time with us. And we might have to bring you back on to chat about crypto in the future. So good luck, and finish off that degree, and we'll chat with you soon.
Sounds good. Thank you, Zach.
All right. Take care.